I hope everybody is doing safe and well. I want to take a look at WTI, crude oil spot prices, and take an analysis on that, and then on the futures price. So, before I get into any of this, let me just preface this by saying um, that technicals just will not work in this environment. The problem with technical analysis is that you try to use past price, to try to predict future price. The problem that you start to face when you try to use past price to predict future price movement is that you then run across a situation in which the past price could be very choppy. It could be that it's not taking any other news into account, and that it's a news-driven environment. And that's really what we're seeing right here. So first off, technicals are very choppy because you could have been looking at this a while back. You could have said, oh, I'm bearish. I'm bullish on an uptrend now. So things have changed very quickly. That's the first thing. Second thing is that's a news-driven environment. Problem is when you try to use the past to try to predict the future, which is all that technical analysis does, is that it doesn't work well in a news-driven environment. So if I have a situation in which I feel that I run across a situation and I say, okay, so this looks bullish, so it's probably going to continue bullish. The thing is that what if Chicago PMI comes out in 15 minutes and all of a sudden it's bearish and then it completely flips it around 180 and it starts going down? That's why it's very hard in this environment with such a high VIX to have to use technicals, because technicals only work well when you are trying to use past price to predict future price, and it works well in a low volatility environment. When you have a high volatility environment and it's very news driven, then technicals are thrown out the window and they can change all of a sudden at any moment. What about fundamentals? Well, it comes back to the same thing. With fundamentals, you run across a situation where you don't have any certainty of what's going to happen. You might have been 6 months ago looking at Q2 GDP, and at the time coronavirus didn't even exist. And so you were looking at Q2 GDP, and you said that everything was going to be fine. Well, there's so much uncertainty in that. And so fundamentals have uncertainty. Technicals don't work because they're trying to use past price movements to predict future price movements. So then you run across that situation right there. So then what do you use? Well, I use the quantitative side of things, and quantitative trading is really based on mean reversion of volatility and such. So obviously you can use that side of things, and we do try to use that. But other than that, you can just use your common sense and ask yourself, from a short-term news-based fundamental basis, if the market is staying really irrational longer than I can stay solvent, how can I actually take advantage of that? And so we run across a situation where you can easily take advantage of this, because if the market is acting really irrational, you can go against the market, but just remember that you might be stuck in that position, you might lose in that position for a very long time before you become right. So, with that said, what's been pushing oil higher? I'm sure you already know, OPEC cuts. Here's what I have to say though. Right here, and Trump was pretty smart about it, because this is the time that we were supposed to get EIA oil data. We were supposed to see a very big build, and we did see a very big build. But right when the oil supply news came out, which comes out every Thursday at the same time, right when the oil supply news started to come out, simultaneously, we had Trump come out and say that we might have OPEC oil cuts. And so it created a situation where everybody just ignored the fact that there was such a big build on oil futures, there's such a big oil supply build that affected the futures that went deeper into contango. But all of a sudden, everybody just ignored that. And all of a sudden, everybody just listened to Trump's tweet where he said that OPEC will do cuts, and it flew up. Oil flew up a lot higher. And so basically it went from 21 to 27 plus. So you had a $6 move up in oil prices because there was quote-unquote OPEC cuts of 15 million barrels that was going to happen. Well, first off, the United States is not even in OPEC plus, so that's the first thing right there. And then the second thing is that they couldn't even agree on a 500,000 barrel cut. So I don't see why they would agree on a $15 million barrel cut. That's why many people were smart about that, and many people right here came at the very top and they started shorting all the way down because many people realized it was irrational. But then the news came up once again, and then everybody said, oh, more OPEC oil cuts, and Trump started talking about it again, and then it pushed it up. But then again, people are starting to realize that is irrational. Start shorting the oil price. So you run across that situation where the market was acting very irrational, and clearly 100% we are not going to get oil OPEC cuts because they couldn't agree on a 500,000 barrel cut. Why are they going to agree on a 15 million barrel cut? And if that is not enough news right there to convince you, on top of that, we have a situation in which Russia and Saudi Arabia don't like the United States. And here's the reason why. The United States back in the day used to make a lot less oil, and it used to make it a lot more efficiently. And so Russia and Saudi Arabia used to rule the oil space. Over time, what started to happen was that the United States started to create oil, but do it so inefficiently. It started to make oil by having shale producers that would make oil very inefficiently for $40 a barrel, and because of that, those oil producers had to get into a lot of debt. So really, it was like $60 a barrel. But what this did was that it pushed the price of oil down, and Saudi Arabia and Russia were forced to make less oil. So both Saudi Arabia and Russia did not like that this was happening to oil prices, and so they basically came across a situation where they both did not agree to cuts, and because of this, it forces the oil price down. But what will happen after the oil price gets forced down is that all the American companies that have a lot of debt, that are very inefficient in the way in which they extract oil, will all of a sudden then go bankrupt, and then oil prices will once again go up. So this is actually great news for Russia and Saudi Arabia. So they actually don't want oil production cuts because they're able to drill oil for $5 a barrel, lower than anybody else in the world. And so for them, it's no big deal once you have a situation like this. And in the long term, this means that the United States is out of the game because the American oil guys can drill oil for $40, $50, $60 a barrel, not this low. And so they're going to go bankrupt. And so you have less people drilling oil then, and that creates a positive feedback loop that then sends oil prices up. So I just don't find a logical reason for oil prices to have to go higher from here due to OPEC oil cuts. So again, it's irrational news, and then you can clearly short on that irrational news. So again, short on the irrational news if the market is being irrational, take advantage of that and take a short position. Just remember that you should keep your position sizing small because it could all go against you. So that's the first thing right there. Second thing that you can look at is volatility. So quantitative analysis oftentimes looks at volatility and mean reversion of volatility and those sorts of above things. So when looking at that, implied volatility is very, very high, and we all know that volatility must mean revert at some point. So if you have a bearish viewpoint on oil, at-the-money call options are the best way to go personally. At-the-money calls, so looking right here, let me refresh this. So I'm going to refresh this right here. Oil futures. So before we even get into oil futures, let me just say that we're going to go into deeper contango, which I already said in a past video. And the reason we are going to go into deeper contango is pretty simple. Whenever you have this sort of a situation, you're going to run out of place to store oil. That means that the storage costs are not going to become higher. The cost of carry will now become higher. And because the cost of carry of oil is higher, there you go into deeper contango. So right here, spot price, $26.52, $26.36. But then we start going all the way out over here. We start finding $42 a barrel. So it is deep, deep contango. Now, with that said, it is deep, deep contango. Is it going to become deeper? Certainly, because as oil prices go down, you run out of place to store the oil, storage costs go up, thus oil futures are going to go into deeper contango. So where do we want to go from here? I'm looking at June 20, 2020. So right here on these futures, I think this is the one that will fall the most. And I want to be short, have a short bias on that. And then going out, these ones are going down while these up here are going up. And that's why I would actually want to see a reversal and see DEIS 2022 go up. So take a long position in that, take a short position right here. But if you want to be more effective with this, you can use options by still taking a short position DEIS 2022, but in June 2020, going ahead and shorting calls, taking advantage of that high IV. So that's currently how I go about it. Deeper contango, we said that in the last video is going to continue. Market is acting irrational, but guess what? It provides you with an opportunity to go ahead, take advantage of it. And technicals and longer term fundamentals are basically thrown out the window in this sort of a high volatility environment. But pay attention to options, pay attention to volatility. Again, short volatility on oil is great. So that's what we're looking at right there. Front month or just 1 month over into the first back month, I would be short. I'd have short bias by shorting calls on those. Other than that, if you have any other questions, we'll keep you updated. If you have any questions, go ahead and ask us inside the comment sections below. I hope all of you guys stay safe and well, and thank you for watching.